I've been day trading for over 4 years, and in this video I'm going to share with you how I would restart my day trading career over again if I had to start from scratch. I use one simple trading system every single day, and it's incredibly simple and repeatable. But before learning it, I had wasted thousands of hours and thousands of dollars that I did not need to had I known the information that I know today. In this video, I'm going to show you my simple way to start day trading from beginner to pro. First, I'll start with what makes the foundation of any profitable trading strategy, a simple yet mechanical way to read the charts. Then I'll go over the exact tools that I use to trade every single day, along with how I was able to build a strong trading psychology using my 3-step system I've developed over the last 4 years. And finally, a simple way to understand the math behind trading that can be very confusing in the beginning, as well as a complete course about the most important things that I know about technical analysis. Then at the end of the video, I'll show you how I built and tested my profitable trading strategy while showing you a real life trading example, so you can see everything that we talked about today in real time. This video is going to be a full course on how to start day trading as a complete beginner. I'm going to give you all the information that I have learned in the last 4 years. The same information that helped me become profitable and put me in the situation that I am in today. But before we get into this video, one important thing I want to mention is trading is not a get rich quick business. This took me over 4 years to finally figure out a profitable strategy and for me to finally stick with it. So in this video, I'm going to be going over the rules, strategies, and lessons that I have learned that helped me achieve profitability. So the goal of this video, in the end, I'll reveal everything that helped me become a profitable trader. After 4 years using one super simple system that helped me remove the guesswork and help you remove years of trial and error from all the lessons that I have learned in my journey. So one of the things we have to understand is why and how does a stock move? In this example here, you see a chart, but why is it moving? You see at this certain point right here, we move all the way down to a certain level, and from right here, we start to push all the way back up. So what's happening at these key levels that we don't know about, and why is it moving? There is one primary reason a stock will move, and that's the direct relationship between sellers in a stock and buyers in a stock. The price of a stock is solely determined from what buyers and sellers believe is a fair price for that stock. And therefore, as a trader, we have to understand where these sellers and buyers are sitting to capitalize off these moves. And the reasons that these moves happen is because, of course, there is supply and demand. For example, let's say you have 100 t-shirts and no one wants to buy them. You're going to have to reduce the price to get rid of your supply. The same concept works in trading. If no one wants to bring the stock price up higher than this level, then sellers are going to step in and push the price down. However, if buyers step up at a lower level of demand, it's going to push the stock price back up. And of course, later in this video, I'm going to go over real examples, so this is going to make much more sense. But for us, the goal of trading is to identify areas where we can capitalize on the move. And later on in this video, I'm going to show you my exact strategy on how I find buyers and sellers that step up and how we can capitalize on these moves. But in theory, let's just say we knew there was a demand zone down here and we entered a trade at this demand zone, riding it all the way to the top of this area. Well, how much money can we really make? The math of trading can be really confusing at the beginning. And that's why I'm going to simplify this for you. And later in this video, when we look at some real examples, I can show you some tools on the chart that can help us figure out the math even more. However, let's say we bought this stock that's at demand for $100. And we sold it up here for $200. So the purchase price was $100 and our new price is $200, capitalizing $100 increase on this stock. To calculate the profit, there's a very simple formula that we can use. First, you take the quantity of shares that you're trading, then you times it by the new price, which is $200 in this scenario. Then you take the quantity of shares and times it by the purchase price that you bought it at. For this example, let's say we just bought 100 shares at $100 for this trade. So pretty much we have 100 shares and our new price was $200. So we subtract that from the 100 that we bought it from. So with the 100 shares, we had $2,000 in total minus the $1,000 initially that we put up, which outcome is $1,000 profit here. Let's say we're looking for a profit on the S&P 500, which is the top 500 companies, and it's one of the safest things, and usually it goes up 8% a year. It is a very safe investment, but only making 8% isn't much per year. Let's say we enter the S&P trade here at this area of demand with $100 of risk, and then we rode it all the way to the top here, which is around a 3R multiple here, which means if we're risking $100 and we're riding it all the way to the top up here, making around $300. Now $300 of profit is really good, but if you zoom in right here, we would have to enter this trade in April and then sell it all the way in September. So to make $300 in profit, it would have took us over 5 months risking that $100 in this trade. Now here, this is just one day zoomed in on the 1 minute chart. So if we risk the same $100 and we enter on this trade looking for the same 3R multiple to the move back up to high of day, now we would have made $300 on 1 day here rather than waiting 5 months. And now this is the beauty of day trading. We're trying to capture these daily moves to the upside or to the downside and make our profit in 1 day. Rather than holding on for months and months on end, we can actually capitalize on these moves on a shorter time. First, let me tell you the tools I use every single day to trade and how I simply use them. And no, you don't need a whole Wall Street setup with 1,000 monitors, a complex strategy, and 1,000 indicators. All you need is one monitor and just to focus on simple trading. And therefore, to start trading, one of the platforms I use is Webull. I really like Webull, and it's a very good broker and it's regulated, so it's safe. So all you have to do is download Webull, open up an account. Once you get approved, then you have to apply for options trading. And one important thing is when you apply for options trading, you do want to make sure you say you have some type of experience and knowledge in the market, or else you will get restricted from options trading. So remember, when you're making the account, to say you have experience 3 or 4 years plus and that you know what you're doing, so you don't get restricted on Webull. Once everything has been accepted and approved, just fund the account and you're ready to start trading. And you can also paper trade on Webull. So what I recommend every beginner to come into trading is start paper trading first, a realistic number that you're going to start with. So paper trade is pretty much a demo account with fake money trading in the real markets. So let's just say you're going to start with 2,500 of your real money. Before you do that, open up a paper trade account with 2,500. Don't do like 250K or something crazy. Do realistic numbers. Start with 2,500 on the paper trade. Try to flip it a few times. Understand how the contracts work. Understand the strategy. Everybody messes up in the beginning, so you might as well mess up the fake money before you go in with real money. Mess up, make mistakes, learn from it, and then once you get comfortable and flip your paper trade account a couple of times, you can go in with real money and have a good head start. The platform I use to chart all my trades and technical analysis and everything is TradingView. TradingView is very popular and a lot of traders use it, and they got so many good features and so much indicators. It's really helpful. You can put multiple stocks on the same screen, all of that. Right here, when you open up TradingView, there's of course a free version and there's a paid version. When you're first starting off, you don't have to get no paid version. You can just do simple charting on the free version and look at the stocks that you want to trade. But once you get more into it and want to do more complex things and have multiple stocks on the same screen at the same time, have indicators, a lot of useful tools, I recommend getting the plus version. That's my current plan I have right here. It allows you to put 4 charts per tab. It lets you use 10 indicators per chart, 100 price alerts, 100 technical alerts, and so much more down here. And once you open up the chart on TradingView, they're gonna look like this with the green and red candlesticks. You're gonna have your time frames at the top, your ticker symbol on the top left, and the time at the bottom right. So originally, this is how your chart is gonna look when you first open up TradingView. And this is how my TradingView looks like here. As you can see, I changed the color, the background, and I have multiple indicators on my chart, which I'm gonna go over later on. So I'm gonna go over the time frames I use to day trade every single day, going from the highest time frame to the lowest. So first, I'm gonna start off with the daily candle. So the 1 day is going to be the largest time frame I look to chart out my trades. Then I hop down over to the 4-hour time frame. which is going to give us a more better reading from the daily chart. Then I jump down to the 1 hour time frame. Then I'll go down to the 15 minute, then the 5 minute, and then 1 minute to execute trades. So these are my time frames I use in order. And what I like to do is the top down analysis. That's pretty much looking at a larger time frame and then slowly zooming in, trying to find key levels of support and resistance, supply and demand, and good intraday pivot points. So once we got our time frames in check, the next important thing to do is to make sure you turn on your extended hours on TradingView. This is pretty much where you see this is the 5 minute chart here, and then you see a shade in the back which is light blue, light yellow / orange, and then we got the white in the background. So the white background is pretty much the New York session open from 9:30 a.m. to 4 p.m. This is the time that we execute our trades. Then when the market closes, it's going to show a light blue shade in the background, and that's pretty much from 4 p.m. all the way until 8 p.m. This is the after hours of the market. And then at 4 a.m. to 9:29 is pretty much going to be that pre-market session, also known as London session. And having extended hours is very important to have on, because you can see what's happening before the market opens. So when you're charting, you can see if there's any significant move before the market opens. Now on the right side, this is my watch list and all the stocks I look at to trade, either for a day trade or a swing trade. So all you have to do is click the plus sign on the top right, and then you type in any ticker you want to trade. You type it in, like for Tesla, for example, we're going to put TSLA. This is Tesla. You click the plus sign on the right, and it's going to be added to your watch list. Then you could click the symbol, and then boom, the chart will pop up. You can start to chart out the stock. So pretty much what I do is I chart on my computer, and I have my screens up on all the stocks that I'm watching up while I'm trading. And whenever a stock comes to a key level or something is setting up in my strategy, I look to execute on my phone and watch the charts on my computer, which I personally like doing that the best, because I'm quick with my fingers on my phone and I could keep my eyes on the chart at the same exact time. So while I'm watching my stocks here, I place my trade on my phone, I watch the chart on my computer. So to sum it up, I pretty much execute the trades on my phone and chart on my computer. And that's all I need, is one computer and my phone. That's it. Even if I travel, I just bring a small laptop that I can chart and still trade off of my phone. These are the two devices that I need to trade anywhere in the world, and some Wi-Fi. Now that I briefly went over the charting and broker I use to trade, I'm gonna go into a full technical analysis guide to help you start trading and understand candlestick patterns. So I'm gonna show you how to read candlesticks. So there's bullish candlesticks and bearish candlesticks. So pretty much a bullish candlestick is typically green here. They'll always open at the bottom here, and when you see the body is how much the stock had moved up, and the close is always going to be at the top of the bullish candlestick here. So pretty much this green shade is called the body, and the top is where we close at. So this means we started from the bottom where we opened and pushed all the way up to the close. And typically you'll see wicks on every candlestick, which is the small line above and below it, pretty much representing the stock how went down there or above there and came back down and didn't really close there. But every bullish candlestick we see here, this represents buyers have stepped up and won the battle over sellers. Vice versa, when you see a bearish candle, that pretty much means the sellers have took over the buyers and we had pushed down on the stock. And the bearish candlesticks are usually red, and the difference between them, the bearish candlesticks will open up at the top and close at the bottom. So you can see we push down here, and we do have wicks on the top and bottom of the candle representing that the stock had went to those points but didn't fully close there yet. Now with that being said, there's a lot of candlesticks traders look at, and it can be extremely overwhelming, especially as a beginner. So I'm going to help you learn some of the important ones and the ones you want to use to enter in on a stock. So if we're going long on a stock, which means we're betting for it to go up, we want to look at all the green candles and what it's telling us. So in this example right here, the most bullish candle, you can see there's a full body with no wick, and a wick again is a line on the body. So there is no wicks here, and we start at the bottom and closed at the very top with no wicks. That means we were very strong and buyers were in full control of this candle. And this is one of the most important candles to use in the strategy I'm going to show you later on in this video, especially when I'm looking to get calls here. Now, these wicks aren't bad. They tell a story here. So pretty much what happened on the second most bullish candle is we opened up at the bottom of that candle and sellers pushed the stock all the way down here, but then eventually buyers stepped up and pushed us all the way back up to the top and closed at the top of the candle, which is really good. That means buyers have stepped up and overpowered the sellers in this candle. Vice versa, for the most bearish candle, we open up at the top and close at the bottom, indicating that only sellers were in on this candle, pushing the stock down. And yes, you can make money when a stock is going down. That's the most important thing about trading, is you can make money when a stock goes up and down. So it's very important to learn this skill and understand how to capitalize off of it. And the second most bearish candlestick is pretty much where we open at the bottom, pushed all the way up, sellers pushed us back down, closing at the bottom, which showing us sellers are stepping up. And this is a really good candlestick to use if you're looking to take a position to the downside. Now I want you to know that every candlestick is not the same. We have different time frames that you should be looking at and understand how each candlestick is being represented. So in this example, you can see I shaded out this one full candlestick. It's on the daily time frame on QQQ with the top and bottom here. And as you can see, this is a very bullish candle on a daily time frame. However, we move on to the right. This is the same exact day on the same exact stock. And you can see the daily time frame on the left and the 5-minute time frame on the right. So we opened up here, pushed down here, buyers stepped up, and we closed around at the top of the day here. So you can see how on this 5-minute time frame, there's more patterns you can look at and try to catch an entry to the upside here. So as a trader, it's our job to identify and catch a move using a proper strategy. And I'm gonna go over a profitable and proven strategy that I use to help me capitalize off of these moves later in this video. Now, to see how the market's moving and how to capitalize on some of these moves, we have to understand market structure. And this is gonna be very important. Now, truly, the market can only move 3 ways. One is an uptrend, where simply the stock is moving up higher. Then 2 is consolidation. We're pretty much having same equal highs and equal lows and stuck in a box. And then finally is the downtrend, simply when the stock is moving down. Now, how are we going to simplify to see these types of trends in the market? Now, in this example, a lot of people can identify this is a uptrend simply because we have a higher low, make a higher high, then a higher low. Then we got a higher low before that, and a higher low after. We can simply mark out a trend line here and see this uptrend held structure all the way until we broke down here. So we were creating higher highs and higher lows until we broke right here on the trend line. Now, this doesn't mean we instantly switch and try to sell the stock. No. Now we need to see what happened that broke the trend. If we zoom in on this example, we see sellers stepped in and broke the trend line on the daily chart, showing that weak price action that we talked about. And when we get a pullback here, you can see sellers step back in, creating a newer low. So we made a low here, a lower low, then our high here, and an equal high here. The highs are equal. But then we break the low again, making a newer low. Now, on this pullback from this low, this is where we will look to enter to continue the downtrend and take it to a newer low. And if we did take this trade, we would have profited nicely off this. Now, simply looking at this trend line of the uptrend and we broke structure. When we broke structure, we started to move downwards. So we could draw a trend line the same way as we did with an uptrend. And we can see when we broke structure back to the upside right here on the trend line. So as you can see, trend lines are an important tool to identify market structure. We had a pullback right here after we broke structure to the upside, and we could have took that all the way to all-time highs here on the chart. So in the most simplest forms, this is how you look at market structure. You can see where you either are uptrending, downtrending, or consolidating. And you can look at market structure in all different types of time frames. Just know that the higher time frame gives us more stronger confirmation on a trend than lower time frames. With that being said, now let's get into the most important part of the video. Now that we got most of the things covered in this video, let's go over the most important part, and that's going to be my full trading strategy that I use every single day to capture trades and make money in the market. And then I'll show you examples of me using this exact strategy in the real markets and see how I execute in real time. Now, there's so many strategies in the market you can choose from. You have supply and demand, support and resistance. You have smart money concept traders, indicator traders. So how do you choose? As for myself, I like to keep trading really simple. And therefore, what I'm going to teach you today is going to be one simple and proven strategy that I use, and I only trade about 90 minutes every single day. The best part about this strategy is you don't need no daily bias, you don't need no fancy indicators, and you don't have to have any guesswork, because it's one repeatable and rule-based strategy that I use on a daily basis. And this strategy is the break and retest system. So what that means, we look for a break of a resistance level here, moving to the upside, and now we wait for that retest of the same resistance that we broke that turned into support and catch the move to the upside. The reason why this strategy works is because previously this level was a resistance level. Every time we came up, sellers kept selling from this level. But once we broke out of that level, it simply means that buyers overpowered sellers. So now that that resistance turned to support, buyers need to step up here and hold it above this level for this uptrend to continue, as you saw in the market structure. And the strategy works so good because if we entered on this trade at that retest, all we have to do is keep a stop loss a break of that support. If we broke this support and buyers didn't step up at that retest level, that just simply means that that level is not strong enough to keep prices pushing up. So even if I'm wrong in a trade, I'm wrong quickly and I get out. But if I'm right, I'm making 2 to 3 or even 4 times what I'll be losing. And for me, I can simplify the break and retest even further, because what I use is a first candle strategy. And this strategy is not complex because I believe that simplicity equals profitability if you can trade it in the right way. So let me explain exactly how to trade this system. So for the first candle strategy, I trade the New York open session. So what this means is I trade at 9:30 a.m. Eastern every single day. So at 9:30, I'll be marking out my first candle of the day. And to do this, I have 3 steps. First, I mark out the high and low of the first opening 5-minute candle. So on the 5-minute time frame, we're gonna mark out our 5-minute high and 5-minute low. So this candle that developed is gonna be from 9:30 to 9:35 a.m. Eastern. And once the candle develops, now we'll be looking for a break to the upside or even to the downside. In this example, we clearly broke to the upside, so now I'll be looking for that retest and look for a move to high of day. However, I can't just enter on the breakout. We have to wait for the stock to come back for the retest. Now I'm going to be looking at the 5-minute high, but also I'm going to be looking at the last down close candle before we broke this 5-minute structure. So I'm going to be marking out the previous red candle. Since it's an uptrend, we're marking out the down close candle before we broke the 5-minute high. And the reason why I mark out this down close candle is because this is where previous sellers were before we broke out. Now that we broke out of the resistance, the buyers are going to overpower the sellers. So now I'll be looking for that pullback to the 5-minute high or to the previous down close candle. And this is where buyers have to step up for us to go back to high day and even higher. And therefore, this is going to give us our highest probability entry. And for the uptrend, we have to mark out the down close candle that holds price for the move to the upside. And if we come back for that retest, this is where buyers have to step in for us to continue. As for the downtrend, we use the last up close candle that holds price for the move to the downside, because previously this is where the last buyers were on this downtrend. Assume we're in the 5-minute range and we broke under. That retest of the up close candle is where sellers overpower buyers and we potentially move to a new low of day. And to make this very clear for you, you can see in the uptrend, our last down close candle is where we want to see that retest for continuation to the upside. And the same thing as a downtrend, that up close candle is where we retest for sellers to overpower buyers to continue lower here. And once again, if this doesn't make complete sense to you, don't worry, because when we get into the examples, it's going to make much more sense. And finally, for step 3, we go to our 1-minute chart to look for that one candle entry. As you can see, we got our 5-minute high here and our 5-minute low down here, and we broke above our 5-minute high, and we see that retest on that level right here where we broke out, and it's the previous down close candle where we broke out to the upside, and we have it shaded in the background. And you can see right here we have a bullish candle indicating that buyers are stepping up off of this level, and this is where we would get in our trade and take that push to the upside. So with that being said, I'm gonna go into live trading examples so you can see in real time how I execute and properly take these trades on this strategy. So here's our first example, and now I'm going to show you exactly how I'm going to execute this trade. So we're going to mark out our first 5-minute high and low. We're on the 1-minute chart here. Now that we marked out our 5-minute range here, we're going to simply wait for the stock to break to the up or to the downside and see which way we're going to take it. As you can see, we broke down to the downside here, breaking under our 5-minute low with weak price action. So what we're going to do is mark out our previous up close candle before we broke out, and we're also going to be looking for that 5-minute break retest or that previous up close candle, that box area. And we're going to enter in on weak price action and take it to a new low of day here. So we'll let this trade play out, and as you can see here, buyers started to step up. We came into our first candle box, and we retested the 5-minute low here with weaker price action. So this is where we would want to take our trade to the downside here. So how would I enter this trade? I would enter on a weak price action, keeping my stop loss a break above the previous green candle high, and at least target a 2-to-1 risk to reward ratio, meaning that every $100 we risk, we're looking to make $200 plus. So in this trade here, we're risking 1,290 to make 2,440 here. So let's let this trade play out and see how it goes. And boom, as you can see, we retested that 5-minute low, weak price action came, we had a little pop up, but this downtrend continued, and we got to the low of day, resulting in a nice win on this trade. So this was one bearish example. Now let's go to the bullish example. So now we're on another example. This is Tesla here. We're letting the first 5 minutes play out, and then we're going to mark out our high and low of the first 5 minutes. Now let's see which way we're going to break. And as you can see, we broke a little bit under the 5-minute, but it wasn't a real clear break, and buyers started to step up. So technically this would not count. There was more consolidation at that 5-minute low, so it wasn't a real break to the downside. So this would not be a valid entry to the downside. But now we can see we clearly broke above the 5-minute high here, and we're coming to retest here with a nice strong bullish candle wicking to the upside. And we can mark out our previous down close candle before we broke above this 5-minute range. So I would enter a buy position here on Tesla, keeping a stop loss, simply a break of the 1 candle rule, and we can target high of day here, which is giving us a 2.33 risk to reward ratio. And in this trade, we're risking 960 to make 1870 on this trade. Let's play and see how it works out. And as you can see, within a few minutes, we hit our profit target, and we're done before 10:30 on the day. We're done very quickly. And as you can see, this trading system is very simple and profitable. It's not complicated, and it's easy to comprehend. You knowing exactly where to set your stops and where to take your profit. And this simple strategy helped me become profitable after 4 years of me struggling trying to find a good strategy for me to stick with. So right here, I'm gonna end the video. I hope you got a lot of information out of this video and you took notes. I wish I had something like this when I first started trading, so I could have pretty much skipped through so much trial and error. With that being said, I hope you take this useful information and benefit from it. And every day I go live on my Discord. I stream my screen and I show you me taking these trades in real time. feel free to join my Discord. I'm gonna drop the link down in the description. And if you want to join a good trading group and a community where we all help each other and we learn together, it's a good opportunity to keep your trading skills sharp and to always keep learning, because in trading, this is a never-ending learning situation. There's always new data and new things coming out every single day, and you need to stay on top of it. All right, I'm gonna call it here. Peace out, and I hope you become successful in trading.